Hello everybody and welcome to another edition of the Messaging Maven. Today, again, I am joined by a guest, this time Madis from Fintech Market. How are you today?
Great, glad to be here.
Awesome. Thank you for joining us. So you are from Fintech Market. Tell me a little bit about what do you guys do, what's Fintech Market about, and what do you do there?
Yeah. Okay, first of all, a little bit maybe about me.
Yeah.
I'm one of the co-founders of Fintech Market, and my job mostly currently is to find new partners like yourself and to integrate them into our system to then allow our lenders or our clients to basically have a more of a variety of integrations to choose from. And what Fintech Market does is we provide a subscription-based software as a service loan management system, where we basically, it's possible to configure the whole process or life cycle of a loan, first from onboarding the customer, asking data from him, doing background checks, maybe doing some risk models, and then to basically paying out the money. And if the loan goes bad for whatever reason, then also there's like debt collection possibilities. And in the very end of the life cycle of loans, there's usually portfolio sales, where you basically take a bunch of loans, put them together and sell them to the highest bidder. And all of these processes are basically easily configurable on our platform.
Cool. Yeah, there's a lot of topics to cover there, but there's a specific thing that we're talking a little bit more about today, which is the topic of loan repayments and all of the innovation related to that. So why is that an important topic? Why is it something we should be talking about, innovation in loan repayments? Why is this something that is an essential part of this entire process?
So having customers pay back the loan is like the most important thing, because if they pay back the loan, you can again use this money to give it back out, and it increases your profits, obviously. But regarding the processes of getting the customer to pay back, there are lots of steps that you can do. For example, one of them is communicating with the customer. And even before you give the loan out, one of the things that you should always do is verify the customer's phone number, that they are actually the person that they say that they are, and that they are reachable through this phone. So when something goes bad again, you have a contact point to call them and ask them and maybe reach an agreement. Yeah.
So it isn't important, it isn't enough to simply have, an email address or maybe even a physical address. Usually you need multiple different communication points to make sure that you get the loans repaid, right?
Exactly. The more, the better. And in some countries, for example, having the address is very important, because when you go into debt collection, then sending actual physical letters might be a legislative law that you need to follow. But doing normal debt collection through those is kind of costly, because sending out physical letters, transporting them somewhere is very costly. And that's why like sending SMSs, maybe WhatsApp messages, emails to notify the customer is much more cheaper.
So essentially touch points that are quicker, faster, but still have that personal touch to them as well.
And they actually also get feedback more quickly, because when an email is sent, SMS is sent, you get like this response that the customer has either seen it or received it, and it's instant feedback. And then you can do later on actions according to this new data that you just got. And with letters, it's just not that, unless you're like sending a letter via a specific transporter who goes to the door, knocks and takes a signature. Yes, it's delivered, but this again costs more.
Yeah. I assume that if you're actually using a courier service where they ask for signatures, etc., it's going to cost a pretty high premium for every transaction, etc. Okay, but taking a step back for a second. So why do loans go bad? Is there a difference in terms of where it goes bad or how it goes bad, in terms of markets, in terms of industries? Why do we actually need to talk about the topic of loan repayments at all?
Definitely, it depends on the country where you're doing business. For example, if you take Estonia, Estonians are very good repayers. They get the invoice, they pay it right away. But let's take, for example, Africa or Latin America, then again, the repayments kind of drop off because whatever reason, maybe they don't have enough money or this currently.
Yeah. So it makes sense. So pretty much you have to be, whenever you're giving out a loan, and I guess this comes down to your risk portfolios and everything as well, as where is that loan being given out? And then of course the phone number verification is different as well. Estonian number is usually easier to verify. Sometimes delivery into African markets or even Latin American markets can be a little bit more difficult. So it creates a situation where there's a lot more to sort of do. But in terms of messaging, obviously being my main interest, what has helped you so far? How does business messaging sort of play into that loan portfolio? How effective it is? How much is it used as a channel?
So I would say with lenders specifically, the best customers are returning customers. So if you have good communication with them, maybe you give them some bonuses. Maybe you send to them some sort of marketing. Come take another loan, get 1 month free interest or something like that. That certainly helps a lot. And also, when talking about when we now go back to the debt collection, there is a specific tone, like when you send out messages. Like the usual process is first, when it goes like overdue, you send a message, hey, you forgot to pay, very friendly, very kind, please pay back. Then later on, it goes a bit more rougher. It's like, hey, if you don't pay back, we're gonna file some lawsuits, please pay back. And then eventually it goes to like, we have filed the lawsuit and now there's basically nothing more to do. And I know a funny story about this, where it actually happened in reverse. So the first message that was sent out, we have filed for a lawsuit, give us back the money. And what actually happened is the repayment amounts increased. More debtors paid back the loan. However, the customer relation is damaged with this when you send so rough messaging right away. Yeah.
So I'm guessing you're not using AI too much to try to manage that situation too well, especially if the tone is so important, then you have to sort of value that communication quite effectively.
Yeah, we don't. Yeah, maybe some of our customers who are actually the lenders, maybe they do some sort of maybe they use some AI because, for example, on our platform, it's possible to integrate different kinds of partners. For example, one of our customers, actually, true story now. Do you know what a robocaller is?
Yeah. Of course.
With our platform, without us even knowing about it, they built this integration with the robocaller, and it had calling these customers, and we didn't know. We noticed that some sort of performance went up. What's going on? We started investigating, and we saw that this actually happened. Very interesting, yeah.
Yeah, I mean, with these days, with all of the different platforms and the tools that are coming about, there's a whole plethora of ways to reach people, while simultaneously, I think you hit one of the most important aspects of this entire process is that keeping that customer communication and keeping that customer relationship as good and as strong for a long time as well, because the idea isn't that, if a person is looking to finance whatever purchase, whatever deal they're trying to make, then, if they have a successful situation, if they have a successful loan, whatever with that, then maybe next time they will want to do it again, and time after that will want to do it again for their financing if the relationship is good. But if you sour it right from the get-go or bombard them with 6 SMS per day, it's not going to be as good. What do you do when the text messages and the communication isn't enough? Are there any, blocks you can use, soft blocks, hard blocks? What are the things you're seeing from all over the world?
Yeah, one of these cool solutions that we've heard of, and they are actually one of our partners called Globetech. They developed this software where right before you give out the loan, you ask the customer to download their software into your mobile phone. And what this does is it gives basically freedom for the lender to maybe lock the phone. So if the loan goes bad, there's a possibility for hard locks and soft locks. And hard lock is basically you can't use the phone. You can maybe do some emergency calls and that's it. So it's basically useless. But in Europe, I don't think that would actually fly because there might be some regulations. But for other countries where it isn't, these regulations aren't yet developed because it's a very new thing, then it's usable. And regarding the soft lock, which is actually should be usable in Europe in general, they can, for example, block certain applications. So, for example, if you're in Latin America or Africa, you could block WhatsApp because this is their most used app. And if the user can't use it, then again, the phone is useless. You can also like set times when you can block these apps. So for example, 9 a.m. to 9 p.m. you can't use it. After that, you can. And they actually have one third option as well, basically showing ads. So if you use, for example, use the phone for 10 minutes, you will get 1 minute or 2 minutes of unskippable ads. Yeah. And the purpose of this whole thing is to basically annoy the customer for them to pay back the loan, that you will be the first one on the list that they always pay to. Yeah.
Oh yeah. I mean, that makes sense. I can see how effective it is. I guess it's another question of, customer relationship, etc. But then again, as you mentioned, those kinds of solutions are things that are probably usable in European context and more usable in, let's say, Latin American countries or African countries, maybe in Southeast Asia, where you also have that bigger risk factor where people don't pay it back as much. So those mechanisms are utilized more to try to reach whatever result you're trying to reach, which is getting your loan paid off. Is there anything else that can be used in European context, for example? What do you guys do here to help with that?
If we move away a little bit from the communications and just repaying the loans, there are some solutions that could also be used. For example, either e-invoicing or direct debit, which is basically the same, where the customer gives gives access to the lender to take out money from their bank account. And so when the due date arrives, the lender will just take the amount that they need and the invoice will be paid. Again, this can be used in a quite interesting way. Again, I kind of have a story regarding this as well. Again, true story. Basically, when they tried, a lender tried to direct debit like 100% of the amount, he wasn't able to. He tried again with 50%, wasn't able to. Then from that 50%, again 50%. So it goes down lower and lower and lower until it reached like 1 or 2 cents. And they basically got the 2 cents, but they paid the service fee of €1. So having like this moral of the story is like having like a minimum amount that you want to debit or charge the customer. Like that's something to learn from.
Yeah. I mean, it's the same thing when, between companies, when you're service providers, you'll have a minimum invoice size because with bank transfers and everything else, every €5 isn't worth going back and forth for. Mm-hmm. I mean, that makes sense. Is that kind of the most common thing that is used in European markets? This direct debit solution, payment links, stuff like that?
Yeah, I don't think it is the most used because this requires trust from the people to the financial services. So it would fly in some Scandinavian and Baltic countries, but for example it's possible also to do in like Latin America, but there the people don't trust this actually very much. So when the payment day comes, they take out the money right away from the bank and you don't have anything to charge them from. So what might help is basically have the charge exactly on the day of their payment day, basically. Then there might be a chance that you might get something. But I think the most common way to repay actually is either a payment link that you send via communication, or that would like redirect to your website, or the best one is it's just a small link that automatically fills in all the data that is needed to pay it back. No authentication, only log into the bank and basically send the money, because it's very convenient for the customer to not have to go to different places and look for the data, look for the amount they need to pay. It will just show them. And that would be like the best one, I think.
So essentially the most effective one is not assuming that the person doesn't want to pay back, but rather that they forgot to pay back. And this is just an easy way to complete the transaction that they were, seemingly going to do anyways.
Yeah, basically, yes.
Okay, that makes a lot of sense. Are there any downsides to this continuous innovation, robocalls, everything else? How does innovation and putting these new methods into practice actually work out?
Maybe the downside is that you don't know what works in what country, because all of the countries, they're different. What might work in Estonia might not work in Sweden or, for example, Latin America, definitely, because of the level of, or better to say, amount of fraud that actually happens. So vetting this also is a very huge requirement.
How large is fraud, or how big of an issue is it, and what differentiates fraud in Estonia from fraud in, say, Mexico?
I would say it's bigger in countries that have a larger amount of population, because there's more, how to say, people, and then that kind of, how to say, increases the amount. Yeah, I don't know what more to say about this currently, though.
Yeah, I mean, that's perfectly fine as well. I'm always curious about, like, why do differences between markets sort of happen? And I guess a lot of them are sort of cultural differences. There will probably be just, functioning differences. There's a consumer survey report that just came out that actually indicated that while in a lot of European markets, say, Sweden, for example, Italy, the trust in telecommunications and text messaging and things like that has decreased, especially due to the fact that ever since the start of COVID, scam has gone up a bit. The use of AI has increased how legitimate a scam message looks like. Most of us have seen like logistics company scam messages that look identical to what they are. And then how does that transition over to legitimate businesses using them as well? So while simultaneously Brazil, for example, now has more consumer trust into messaging and the utilization of digital devices for financial services or day-to-day life services. So it'll be interesting to see how these market dynamics also change. Will markets like Estonia become less trusting, and then markets like Latin American markets becoming more trusting, or how will that actually play out in the long run as well? What are you most sort of excited about or thinking more about in terms of innovation looking forward in the loan repayment space?
I think like the solution that we talked before, like this locking, this seems like a very upcoming and very popular thing to use. I don't see many lenders actually using it yet, but they've done use cases where it basically they show it's like they increase the repayments by half. So it's a very, very effective way, basically. Yeah.
And do you see the possibility of, right now, as much as I understand, it usually works that during the loan process, you will, download an app onto your phone that then helps blocking that? Do you see potential cooperation with platforms like WhatsApp, for example, that if you're going to take a loan, then, you will have direct contact or a direct partnership with someone like WhatsApp, and they will allow you to do these processes and do these blocks?
Yeah, definitely. Like, for example, for us, like these partnerships are very important, and having this direct communication always helps. However, when you brought up the example of WhatsApp, they are not actually very fond of sending messages and dealing with messages about debt collection, especially, and dealing with these loans, because when you send a message there, you will have to like basically configure like template that you want to send, that they are very, very strict what they allow in there.
Yeah, I guess their interest is very much towards not having a negative association with their platform of any sort or any kind, which is interesting because if you think about it, you can't only have positive communication in your life. You're going to have negative conversations. You're going to have negative associations with when you do something, but rather it's, them in a way trying to hide their head under the sand and make sure that nothing like this happens. It's the same thing that a lot of them don't also want to associate promotional messages with their platforms for the same reasons. They don't want people to receive promotional messages through their platform, while simultaneously people actually expect to be given promotional messages. And there's a larger expectation, especially in the younger generations, that they will be approached via text message. They're expecting reminders. They're expecting things like that. These days, I remember myself, one of the most effective ways how to remind me to pay an invoice or a service or a bill that I haven't paid is when I get a text message my notifications on my phone are usually off, or even if they are on for text messages, my phone is usually away from me. But my smartwatch is always on my hand. So I'll actually see it on my body, that notification about it first and foremost. And the next time I go on my phone, I will see that text message up there as well, which will immediately remind me to do that. So it's a lot more personal of an approach to getting closer and doing things like that. So yeah, I think it's quite an interesting topic as well, because if you think about all of the hard locks and everything else, it's also a question of, will European legislation allow it? Will they allow steps like that, or will they, regulate past it, or even get more stricter so you can't do anything to the actual user themselves?
What I personally think is they will get more stricter, because that's like the thing that we're currently seeing. And I actually think like you can view the phone and like having internet access now as like human right basically. And if you take that away, I don't think that would fly. Yeah.
Yeah, so they would consider it disproportionate to your actual sort of, not paying back a loan doesn't mean you shouldn't have access to everything that the internet has to offer.
And because in some countries, for example, people don't have any more like personal computers. All they have are phones. So their whole life is in the phone. So taking that away is a big problem. Yeah.
Yeah, I can see how that makes sense as well. And then again, from the loan providers or loan services perspective as well, you expect the money to be somehow returned to you, or the loans to be actually paid back. And you will ultimately get to a position where, if the tools are taken away from you, you can't send messages, you can't lock phones, you have to pretty much only send courier-based notifications where people take signatures to it. Do you see that there's a possibility where loans will only become more and more expensive because of it? Because getting a loan back is so much harder, or using methods to actually getting it back is harder?
Yeah, like this is the place where you should actually, where scoring people becomes more important, because that way, when you score people more correctly, you don't have to deal with this. So having AI is now rising, and basically, if you already have, for example, given out 100,000 loans, you know which people paid it back, which didn't. You can run it through AI, and you get some sort of basic model that to which people you should give a loan to and which people not. So this is like a premeditative solution that you can use. Yeah.
Yeah, I guess that makes sense as well. So to combat the idea that you might have fraud, you essentially start off with better verification from the get-go, and actually making sure that the person who gets the loans is as probable of paying the loan back as possible. I mean, probably the last question I have before we actually return to the audience's questions is, what's the error percentage these days? There's probably, within all of your models and your risk models, there's probably an error percentage of, you did the verification, you looked at their income, all of the statements, and yet they still don't pay it back. How big is the margin? What are the, not specific numbers, but how often is it possible to be wrong?
It's possible to be wrong quite often, because every case is individual, every country is individual, like every marketplace, all the cultures, that they're all different, and it depends. As I mentioned earlier, Estonians are very good repayers, Latin America a little bit less. And
so the idea being like, how wrong can you be? And the idea being that there's a lot of variables, so you can be very wrong, essentially.
Yeah, that's true. You can. Yes.
Cool. Let's see some audience questions as well from our assistant behind the camera. Let's see. First question. What role does financial education play in loan repayments? Whose responsibility is it to educate the borrower? So how important is education?
I think it's quite important, because, and I don't think it's taught enough in school currently regarding finances, because when, for example, you take out this loan that you actually cannot afford to pay back, it might spiral you into a new loan. But having better education about it definitely does help. Yeah.
Okay. Yeah, makes a lot of sense. Let's see, what else do we have? Is the loan repayment shaped by culture or any other demographical factors? Can elaborate on this a little bit. So if we're talking about different markets, is it a purely cultural thing or is it also a market by market thing?
Sometimes it's cultural, sometimes it's malice, because sometimes people just take a loan and they don't even want to repay. That's their whole stick, basically. It definitely boils down to also like, if you take religion, for example, if we take Islamic countries, then for those, you can't actually even ask for interest. Those loans are built totally different, basically. And culture and religion, I do think, play into this, yes. Because also when we take Estonians, for example, I don't know why, but for example, you said yourself when you get like this notification about your, maybe you forgot to pay it or something, immediately you go and pay it. It's just something in our blood. We don't know what exactly, but yeah, it seems so.
Is there a difference in terms of like age groups as well? Are younger people more likely to pay it versus older people or middle-aged people? Is there like a difference in demographics in that sense as well? Like younger people pay it more, older people pay it less?
I would say that younger people pay less because older people are more financially stable and more likely to have jobs and to have income, actually. And that's why, yeah, I think.
No, that makes a lot of sense. Okay, let's see what else. Looking into the future, where do you think loan repayments are moving? What can we expect?
I think comfort is the future. Basically, having as easy process as possible. Having, as I mentioned before, sending a link without, when you click on the link, it's just without authentication. You just go into the bank, all the form is filled, and you just accept, maybe enter your bank PIN, and that's it. So being as smooth as possible, because wherever you put up like barriers for the customer to make it like harder for them to understand what they need to do. Maybe they need to contact your customer support. They can't find some data. It increases your work effort that you need to put in when it could be much, much easier.
Yeah, we'll end up being in a situation where if your loan is overdue, for example, you'll just verify via biometrics and it just does everything else for you and just takes it off your bank account.
Yeah, that's where we're heading, yeah.
Yeah, exactly. So in what ways are subscription-based loan services such as buy now, pay later reshaping traditional loan repayment methods?
So basically what buy now, pay later is, you go to the store and for example, you want to buy a washing machine, but you don't have the money right now. Then you will ask a lender to buy it for you and you will start repaying it for the lender. And this makes all of these things that are in the shop and you are not able to buy them. It makes them more accessible to the wider audience, wider demographic, basically. And I think like, because this is now a rising trend, this buy now, pay later product. And we see that all of the lenders currently are running towards it. It's like the go-to thing.
Which is cheaper for the consumer? Buy now, pay later in installments, or taking a one-time small loan, for example, and then using that to purchase that item?
It's depends on the APR. You just have to compare the APR, whichever is smaller, because you could have this buy now, pay later's percentage be higher than the installments, or we could have it vice versa. So I suggest you just look at the APR.
Makes sense. How are traditional financial institutions collaborating with fintech startups to implement and adapt to new loan repayment technologies and methods?
Can you repeat that?
So how are old banking institutions collaborating with you on loan repayments and everything else? Do you work a lot with banks? Do you work with, insurance institutions, central banks? Is there active collaboration between you, or they're sort of an island unto themselves?
Currently, I would say like the closest one that I could say that was like somewhat related to us is LHV, because we do some payments through them. Our lenders do some payments through them. But in general, we do not look towards banks. Also, one thing that we might do is basically have like integrate some banks statement imports to basically allow our lenders to check if new incoming payments or outgoing payments go and whatever. But we don't really look towards banks. We look more towards smaller lenders or if some neo banks that want to like break through from the big bank name, basically.
Are lenders who are, providing specific financial services or specific portfolios competitors to banks? Are they partners to banks? How do they function between each other?
Yeah, they're definitely competitors because they take the clients away from the big banks. And why they can actually do it is because they do their lending more, how to say, smoother, more easier, more, it's faster than a conventional bank.
Yeah, I remember a friend of mine took out a loan from his bank, being like a gold customer, having all of those perks. So the loan terms were quite good, but he actually had to follow up on the loan application 5 days or something like that after making the loan application to get an answer from the bank. With actual financial service providers who are focused on lending, you would get an answer in minutes to your application and the money wired quite quickly as well.
And this is like one of what our product actually gives, because you can automate all of the process, doing background checks and even paying out the money. It can all be automated without any manual checking.
Yeah, and that of course speeds up the process, speeds up the service, and creates a better customer experience as well. Exactly. Cool. Let's take 2 more questions. With the customer experience, don't the blocks make the experience worse? How do you bounce back from the negative encounter measure with the customer?
It definitely makes it worse, but that's the point. It is to annoy the customer to get your money back, because you gave a product, you gave them the money, they did whatever they wanted to do with the money, and now the time is due and you need it back. However, that definitely might have some effect on customer relations. Maybe he now won't take from you again, maybe he will go to another place, but time will tell.
Yeah, and of course, from the other side, if there is a person who, after multiple reminders, multiple different measures being applied, gets to a position where they get a hard block on something, then it's pretty likely that even if they do repay the loan in full, they will have a much harder time getting the loan from you next time anyways, because they already have quite a bad history in terms of loan repayments and showing themselves to be quite, non-diligent in that matter. Cool. And the last one. Do you face a lot of fraudulent activity regarding loans?
As I mentioned before, me and my company personally, we don't, but our lenders definitely do. And that's why we help them put all these checks in their flows, basically to do document verification, maybe some like Verif or do the KYC, basically, and verify that the customer is a good customer, do some credit checks maybe, and then make the decision based on this. So if the customer has basically a long history of repaying maybe, or it doesn't even have to be like a lot, but if he has some history that says that he pays back, that's a big plus. But if a customer doesn't have any history, then you don't know if he's ever going to pay back or not, because he's blank slate for you.
Yeah, it's always pretty much a 50-50 chance whether they'll pay back or won't pay back. I guess it's kind of similar to credit scores in the US, where in order to get a loan, you have to first get a credit card and then build up your credit score, then pay that back. And then you'll kind of qualify for a bigger loan in the future.
Yeah, you basically build trust with the financial services. Yeah.
Build trust with the financial services. It doesn't work that way here. Here we essentially just, if you have the money on the account and there's positive cash flow and you haven't had history with non-payments, then you will probably get the allocation of the funds if you have enough to pay the monthly premiums, etc. Okay, cool. Any closing remarks or thoughts?
Maybe one thing to the lenders is you shouldn't be afraid to basically try new things. So, for example, if you could have like you have a set in stone process that is repayments. Maybe if it's possible, do a 90%, 10%, add a new flow basically and run 10% of those clients through there and 90% through the old way, and then compare them, which works better. So this would maybe increase your repayment as well.
Yeah, so
if done correctly. Yeah.
So doing A/B testing and making sure that you're constantly moving with the times and not using carrier pigeons to deliver your loan payment notifications. Got it. Cool. Thank you very much for joining us. Thank you for all of your insights into this topic, Madis, and sharing what you guys do and how the loan repayment structure is working right now. Thank you everybody to listening, and we'll see you next time at another Messaging Maven event. Thank you everybody.